Welcome to Explain the Charts, where we dive deep into the news and market data to understand what's truly moving stocks. Today, September 23rd, 2025, we're dissecting Apple, ticker Apple, on a day filled with significant market activity. Recent headlines are buzzing with Apple's resurgence, driven by robust early demand for the new iPhone 17 line, including the highly anticipated redesigned iPhone Air. Analysts are becoming increasingly bullish, with Wedbush notably raising its price target to an impressive $310, citing a pent-up consumer upgrade cycle and substantial AI monetization potential. This AI premium is currently seen as not fully priced into the stock, suggesting further upside. This surge has been so powerful that Apple officially erased its 2025 losses, becoming the last of the tech mega caps to turn positive this year. Let's start our analysis by displaying the one-day chart to grasp the broader context of AAPL's journey over the past year. Looking back to December 2024, Apple hit a notable peak near $260.09, which then served as a key resistance level. However, 2025 brought significant challenges, as evidenced by the sharp declines in January and a particularly steep downturn in early April. This period saw the stock plummet to its 52-week low of $169.21 around April 8th, reflecting broader concerns about Apple lagging its tech rivals and its AI strategy. The news cycle from this earlier period often highlighted Apple's cautious approach to AI chip and data center investments compared to competitors. Following that April dip, Apple began a gradual, yet at times volatile, recovery throughout late spring and summer, slowly regaining its footing. The positive market sentiment, coupled with reports of increased production for the base iPhone 17 model in mid-September, offered crucial bullish signals. Now, let's zoom in on the one-hour chart to meticulously analyze the immediate market reaction to the official iPhone 17 event. Filtering our view to September 9th and 10th, 2025, we can clearly see the initial investor disappointment. On September 9th, the stock opened around $239.30, but slipped throughout the day, closing near $237.88. News reports from that day indicated Wall Street was largely underwhelmed by what they perceived as merely incremental upgrades. This negative sentiment continued into September 10th, with the price dipping sharply from above $233 to consolidate below $227 in intraday trading. This demonstrates how even highly anticipated product launches can lead to bearish reversals if initial expectations for breakthrough innovation are not met. Switching back to the one-day chart, the narrative shifts dramatically as positive follow-up news started to surface. After the initial post-event dip, reports of extended iPhone 17 shipping times quickly turned the tide, signaling robust demand in crucial markets like China and India. You can clearly observe the emergence of strong green candles from September 19th onwards, reflecting a powerful resurgence of bullish sentiment. The stock began to climb steadily, regaining lost ground and building significant upward momentum heading into last Monday. To capture the full intensity of this recent market enthusiasm, let's transition to the 15-minute chart, focusing on the dynamic trading day of September 22nd, 2025. Here, we witness the aggressive buying pressure that propelled Apple upwards by over 3% in a single day. Observe the sustained push past the $250 level, which had previously acted as a strong psychological and technical resistance point. The stock continued its impressive ascent, decisively breaking through several minor resistance levels throughout the trading session. This rapid climb on significant volume underscores strong conviction from buyers, directly correlating with news of the stock turning positive for the year. Analyst upgrades and the market's growing belief in the iPhone 17 upgrade cycle are evidently driving this substantial money flow into Apple. The sustained high volume during this rally further reinforces the strength and validity of this upward movement. As of the close on September 22nd, 2025, Apple settled at $256.08, placing it firmly within striking distance of its December 2024 high of $260.09. This $260 level now stands as the immediate and most critical resistance point for the stock. A convincing break and sustained hold above $260 would be a strong technical signal. Such a move would indicate a continuation of the current bullish trend, potentially paving the way towards the ambitious $270 to $310 price targets set by Wedbush and JP Morgan. The momentum suggests short-term traders might look for entries on slight pullbacks or breakout confirmation above $260. Conversely, on the downside, the previous resistance around $245 to $248, which was decisively breached during this recent rally, should now serve as a crucial short-term support zone. A healthy market action might involve a temporary pullback to retest these levels, ideally on lower volume, before a potential resumption of the uptrend. However, a significant break below $245, especially if accompanied by heavy selling volume, could signal that the bullish momentum is faltering. This would necessitate a reevaluation of the current uptrend and potentially lead to a move towards the next significant support level. That next critical support zone lies around $230 to $235, a level that provided strong footing during the early September dip. Traders should also monitor for any negative news, such as potential EU regulatory actions or further insider selling, which could trigger such a downward move. In the long term, bullish sentiment for Apple hinges on several critical factors beyond the immediate iPhone cycle. Apple's ability to not only sustain robust iPhone 17 sales, but also to meaningfully deliver on its ambitious AI initiatives will be paramount. Successfully navigating potential regulatory hurdles, particularly concerning the iPhone Air's eSIM-only design review in China, is another key consideration. If these factors align positively, the stock has substantial long-term upside towards the higher analyst price targets. Conversely, any signs of waning iPhone demand, intensifying competition from rivals like Huawei and Xiaomi, or persistent delays in AI integration could quickly turn sentiment bearish. Such negative developments could potentially push Apple back towards its earlier 2025 lows, emphasizing the importance of a diversified portfolio. To recap our analysis and provide some unbiased predictions, let's consider the probabilities for AAPL's near-term movements. Prediction 1. Bullish continuation. It is highly likely, approximately a 70% probability, that Apple will attempt to test and potentially break the $260 resistance level in the very short term. This likelihood is strongly reinforced by the robust current market momentum, recent analyst upgrades, and the stock's successful recovery of its 2025 losses. Consistent positive news flow regarding strong iPhone 17 demand and pre-orders would further solidify this bullish outlook. Prediction 2. Consolidation or slight pullback. There's a moderate chance, around a 25% probability, that after this rapid ascent, Apple might enter a period of consolidation. A slight pullback to retest the $245 to $248 support zone, ideally on diminished volume, would be a healthy market correction. This would allow for natural profit-taking and the entry of new buyers, setting up a more sustainable long-term uptrend. This scenario is reinforced if current buying volume begins to taper off without a new major catalyst. Prediction 3. Bearish reversal. A low probability, approximately a 5% chance in the immediate short term, exists for a significant bearish reversal from these levels. This would likely require the emergence of major unforeseen negative news, such as unexpected iPhone 17 production issues or severe regulatory setbacks. The prevailing market sentiment is currently strongly bullish, making a sharp, unprovoked reversal less probable in the absence of such a strong catalyst. Finally, as you consider trading Apple, watch the $260 level as immediate resistance and $245 to $248 as your key short-term support. Continue monitoring ongoing iPhone 17 demand reports and any substantial updates on Apple's burgeoning AI strategy. These fundamental drivers will remain crucial in determining whether Apple can continue its impressive rally into year-end 2025 and establish new all-time highs. Thank you for joining Explain the Charts, where we empower you with data-driven insights.